ABBVIE stock, ticker symbol ABBV. Yesterday they presented the quarter results and the stock went down almost 9%. And to be honest, the results itself weren't that bad. ABBVIE missed on EPS and revenue by a small margin, and almost everybody expected a decline in their top drug Humira, which was the case. But the problem was in the other drugs as well. The growth started to slow down a bit, which worries me and other investors a lot. For the upcoming earnings, almost all analysts expect another miss for ABBVIE. From a dividend point of view, ABBVIE is loved by many investors. Dividend yield is at almost 4% and the 5-year growth rate is at almost 15%, so this looks really good. But does this mean that ABBVIE stock is a buy at current prices? Well, in this video I'm going to show you real quickly what ABBVIE does. The most recent earnings report, the fundamental analysis, dividends, returns versus the S&P 500, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does ABBVIE do? ABBVIE is best known for manufacturing Humira, a medication used to treat arthritis and Crohn's disease. Next to that they have several other drugs within their portfolio, including Rinvoq and Skyrizi, which are the new top high growing drugs. ABBVIE reported first quarter diluted EPS of $0.13, which is a decrease of 94%. Adjusted EPS reported $2.46, a decrease of 22% year over year. ABBVIE reported a revenue of $12.2 billion, a decrease of almost 10%. And to be honest, this doesn't look very good to start with. If we dive in the revenue segment breakdown, we see that immunology reported $5.5 billion in revenue, a decrease of 9% year over year. Highly impacted by the decline in revenue for Humira and growth slowing down for Skyrizi and Rinvoq, which we will cover in a minute. The second segment, hematologic oncology, reported $1.4 billion revenue, a decrease of 14% year over year. The third segment, neuroscience, reported $1.6 billion revenue, an increase of almost 14% year over year, which is very nice. And the last segment, aesthetics, reported $1.3 billion, also a decrease in this case of 5.4%. When we check the full portfolio breakdown, we see that immunology is by far the biggest segment. This segment represents $5.5 billion of the total $12.2 billion, being almost half of their revenue. And the biggest drug within this segment, Humira, is decreasing 25% in total year over year due to its patent loss. Skyrizi and Rinvoq are the new two top drugs that are increasing at a high pace, but are facing some slowdown in revenue versus previous quarters. The revenue increased roughly 45 to 50% year over year, which is still a good number, but investors expected higher numbers here. So this is one of the reasons why the stock is down. And to me, I'm not that worried that much. Hematologic is the third biggest segment and decreased 40% year over year. The second biggest segment, neuroscience, increased 40% in revenue year over year, which looks pretty good. Despite the disappointing earnings, ABBVIE raised the outlook for the full year of 2023 from a range of 10.62 to 11.02 EPS to the new range of 10.72 to $11.12, which is very nice. This includes the acquisition of IP R&D and milestone expenses. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Next to that, don't forget to subscribe to receive multiple analyses every week. Let's continue by diving into the fundamentals of this company. ABBVIE is a $286 billion market cap company, which makes them one of the largest drug companies in the US, and also one of the bigger companies in the US. PE ratio is at 24, which could indicate that you pay a small premium for the stock. Later in this video I will show you my 3 price targets for ABBVIE, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 58 billion, and in this graph we see that revenue went up in the long run. During the lockdown periods, revenue skyrocketed, and right now revenue is slowing down a bit, so that's something to keep in mind. Margins are going up and down quite a bit, so it's not really steady and consistent. Since 2021 it's going up again, but most recently it started to decrease a tiny bit. EPS is also going up in the long run, but it's not really steady and consistent. Nevertheless, it isn't terrible either. PE ratio is at a small premium right now, and in here we see that it always has been there. Price to sales ratio is at roughly 4.5 right now. Over a longer period of time it's increasing quite a bit. The current number thus concerns me a bit, and I would like to see a lower number here. Price to free cash flow is around 12 right now, which could indicate that they are undervalued based on this number, so this looks really good to me. Analysts have mixed feelings about the coming years, and in 2023 we see that they expect to see a 19% decrease in EPS. In 2024 things start to recover, and after 2024 we see a high single to low double-digit growth. It's pretty much the same story with the revenue. In 2023 and 2024 it doesn't look good, but after 2025 they expect to see mid-single digits. Return on assets is sitting at 12.5%, which is above my 10% minimum, so this looks pretty good. Return on equity also looks really good. And the most important number, return on invested capital, is sitting at 16%, which is a really good number. They really know how to invest their money. However, it's lower than the 5-year average, so that's something that I don't like. Current ratio is at 0.96, which is very nice, since it's below the 1.5 mark that I prefer. So this looks also quite good. Total debt is sitting at 64 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at 9.2 billion, so they can't pay down a big chunk of their total debt, which is something that I don't like. However, operating cash and leverage free cash flow is looking way healthier. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And in here we see that free cash flow is going up in the long run. To me this is one of the reasons why I love ABBVIE. Their free cash flow is growing at high numbers. But a thing that I don't like are the shares outstanding. It's going up quite a bit since 2020. To me this is very important. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 3.98%, which is a great number. Annual payout is at $5.92. The payout ratio is not displayed here, but in a second we will see that it's around 41%, which is a decent number. I prefer 50% or lower, so right now they have roughly 60% left in cash to buy back shares, pay down debt, acquisitions, research and all other things. The 5-year growth rate is at almost 15%, which is a great number. On top of that, they grew the dividends for 9 years in a row, which is also pretty good. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio is decreasing, which is a good thing. And it is also sitting at a good number, as I told a second ago, roughly 41%. In this graph we see that the expected dividend in 2024 and 2025. Of course this is an estimation and can be highly impacted by the results, but it gives you a rough indication. In 2023 it's expected to increase to $5.91, giving you a 3.97% dividend yield. And in 2024 it's expected to increase to $6.15, giving you a 4.30% dividend yield. In 2025 it's expected to increase to $6.4, giving you a 4.3% dividend yield. Overall these dividends look pretty good to me. But how about the historical returns? I decided to compare ABBVIE stock with the overall market, in this case the S&P 500. Next to that I added Amgen and Gilead. On the 5-year chart we see that ABBVIE had a 19% return including dividends, versus the S&P 500 returning 69%. ABBVIE beats the S&P 500 but also the 2 other drug companies by quite a margin. On the 1-year chart it looks pretty different. Gilead had the highest return with 41%, while the others are sitting nearly flat numbers. On the 6-month chart we see that Gilead had again the highest return with 21%, while Amgen is sitting at almost minus 9%. And ABBVIE is again returning flat numbers. The S&P 500 is sitting at almost 10% return. On the 1-month chart we see that Gilead had again the highest return versus the others. ABBVIE had the lowest return, including the decrease most recently. So bottom line, ABBVIE did beat the S&P 500 in the long run, and also some competitors. To me this looks pretty interesting, but is ABBVIE still a buy at current numbers? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4%, 6% and 8%, since I think they will increase the revenue at lower numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. Profit margin I'm filling in 20, 21 and 22%. And for the free cash flow margin I'm filling in 39, 41 and 43%. For the PE ratio I'm filling in 18, 19 and 20. And for the price to free cash flow I'm filling in 11, 12 and 13. My desired annual return is 12.5%, since I can get an easy 10% average annual return owning an ETF. Right now ABBVIE is at $149. I hit analyze and we see only a few green numbers. We have a low price target of $96 to $148, which is quite a big drop. We have a mid price target of $121 to $186, which is still a pretty decent drop. And we have a high price target of $153 to $233. To me, the mid price target is the most justified here, since I expect the company will face slowdown in revenue versus historical numbers, but not as much as we are seeing right now. Based on these numbers, 121 to 186, you could argue if ABBVIE is undervalued whether or not. They are in the middle of this price target. My final conclusion is that I really like the company. They are able to grow some new drugs at a high pace, but it does worry me to see Humira facing big decreases. Dividends are great and most fundamentals look pretty good either. So from a dividend point of view I love ABBVIE. From a value point of view things are pretty interesting. The decrease in stock price is something that I really like, but I wouldn't mind to see $120 stock price. It gives me the opportunity to buy ABBVIE at lower prices without increasing my cost average that much. For now I'm waiting for the stock price to come down just a little bit, which could easily happen at the next earnings report. Of course we need to analyze the company again whenever the next earnings report is released, to see if fundamentals are changed. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.